This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. U.S. crude stocks rose on the back of a sharp drop in oil exports, while gasoline and distillate inventories fell last week, the Energy Information Administration said on Wednesday. Crude inventories rose by 5.9 million barrels in the last week to 445.6 million barrels, compared with analysts' expectations in a Reuters poll for a 0.6 million barrel rise. It had fallen by the most on record in the week to July 28, U.S. Energy Information Administration data showed. Crude stocks at the Cushing, Oklahoma, delivery hub rose by 159,000 barrels in the week to August 4, AS said.
Oil prices steadied on Thursday as investor caution ahead of U.S. inflation data softened a protracted price rally on supply tightness. Brent crude edged up 14 cents to $87.69 a barrel by 0757 GMT, while West Texas Intermediate crude, WTI, crept up by 1 cent to $84.50. Oil prices have been boosted in recent days by extensions to output cuts by Saudi Arabia and Russia, alongside supply fears driven by the potential for tensions between Russia and Ukraine in the Black Sea region to threaten Russian oil shipments.
Moving on to the top news in the energy sector.
Global refiners are raking in hefty gains, fueled by a rebound from second quarter lows in margins on making oil products such as diesel, jet fuel and gasoline, a trend that oil companies and experts expect will continue for the rest of 2023. Recovering profit margins may prompt complex refiners to maximize yields of transport fuels, causing excess naphtha output as a byproduct in a tepid petrochemical market and further depressing feedstock margins. Refiners are optimistic about the bull run due to projected sustained strong demand growth and low inventory levels.
European refiners' crude intake in July rose by 0.5% compared with June to 9.33 million barrels per day but was down 4.6% from a year earlier, Urals stock data showed on Wednesday. Total crude and oil product stocks held by refiners in July reached 1.02 billion barrels, slightly below June levels, but up 1.3% from July 2022 levels. Middle distillate stocks were more than 5% higher than a year earlier at 385 million barrels, but were nearly 1% below June levels.
Next, we have the top news in metal markets.
Copper prices rose on Thursday on hopes of further Chinese stimulus measures as investors assessed weak economic data, though sentiment was cautious ahead of U.S. inflation print that could guide movements in the dollar. 3-month copper on the London Metal Exchange advanced 0.4% to $8,435 per metric ton by 0710 GMT. The most traded September copper contract on the Shanghai Futures Exchange increased 0.6% to 68,590 yuan, $9,512.52 per ton.
Dalian iron ore futures fell on Thursday, erasing earlier gains as a weak steel market and lingering woes over steel production cuts offset optimism about resilient demand after some mills in China's top steel production hub Tangshan resumed production. The most traded January iron ore on China's Dalian Commodity Exchange, DCE, ended daytime trading 0.49% lower at 714 yuan and 50 fen, $99.10, a metric ton. The imported margins of iron ore cargoes have been quite decent recently, luring traders to secure the imported cargoes, temporarily supporting the spot prices, with the strength filtered through into the domestic futures market today, said Cheng Peng, a Beijing-based analyst at Sinosteel Futures. We will now look at the top news in the agricultural sector. Dalian iron ore futures fell on Thursday, erasing earlier gains as a weak steel market and lingering woes over steel production cuts offset optimism about resilient demand after some mills in China's top steel production hub Tangshan resumed production. The most traded January iron ore on China's Dalian Commodity Exchange, DCE, ended daytime trading 0.49% lower at 714 yuan and 50 fen, $99.10 a metric ton. The imported margins of iron ore cargoes have been quite decent recently, luring traders to secure the imported cargoes, temporarily supporting the spot prices, with the strength filtered through into the domestic futures market today, said Cheng Peng, a Beijing-based analyst at Sinosteel Futures.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.